Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we start talking about the income pick, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free special reports that we offer to our readers, and they get delivered to your inbox. There are a lot of different types of dividend companies. For example, there are companies with unsustainable ultra-high yield dividends, stable payouts that don't grow, payouts that fluctuate quarterly, and those that increase their payout annually. Then there is the gold standard of dividend investing, Realty Investment Corporation, traded on New York Stock Exchange under symbol O. John, what can you tell us about today's income pick, Realty Income Corporation?
Realty Income Corporation is the largest triple net REIT in the U.S. and fourth largest global REIT, with over 13,100 real estate properties owned under long-term net lease agreements. The REIT's properties, which are currently 99% occupied, are under long-term net leases to about 1,240 tenants in 84 different industries. Now, convenience stores account for the largest percentage of the company's contractual rent at a little more than 11%. That's followed by industries such as grocery stores, dollar stores, home improvement, drug stores, basically everything you can think of. Now, some of the company's top clients include 7-Eleven, Dollar General, FedEx, Walmart, Wynn Resorts, Home Depot, and Walgreens. Thanks to the company's diverse tenant base, 91% of its total rent is resilient to economic downturns and or isolated from e-commerce pressures.
To maintain its status as one of the largest global REITs, Realty Income needs to continually expand and diversify its portfolio. If you can elaborate on that, John?
Yeah, you're correct. Past August, Realty Income announced it signed a definitive agreement to invest $950 million to acquire common and preferred equity interests in a new joint venture that owns 95% interest in the real estate assets of the Bellagio, Las Vegas. This isn't the company's first foray into the world of gaming. In February 2022, Realty Income signed a definitive agreement to acquire the Encore Boston Harbor Resort and Casino property for $1.7 billion in a long-term net lease agreement with Wynn Resorts Limited. And again, there's more acquisitions in 2023. This past March, Realty Income signed a definitive agreement to acquire up to 415 single-tenant convenience store properties located in the U.S. And in February, Realty Income announced it signed a strategic real estate alliance with Plenty Unlimited to invest $1 billion to build indoor farming space leased to the company.
And here's something that should make dividend hogs happy. This company announced its 122nd monthly distribution increase and 639th consecutive monthly dividend.
Yeah. Now, what sets Realty Income apart from its peers is its ability to raise its monthly dividend for years on end. Since 1994, its annual dividend has expanded at a compound annual growth rate of 4.4%. It's also part of the S&P 500 Dividend Aristocrats Index. That's reserved for companies that have increased their annual dividend for at least 25 consecutive years. Realty Income has actually increased its dividend for 30 years. As you were saying, most recently in August, it increased its monthly dividend to 0.2560 per share. Now that's up from 0.255 per share the previous month. This represents the 122nd dividend increase since Realty Income went public on the New York Stock Exchange in 1994. And as we're saying, the 639th consecutive monthly dividend paid. The new monthly dividend increase represents an annualized dividend of 3.072 for a yield of 6.15%. That's almost double the current inflation rate and almost quadruple the S&P 500 average dividend yield of just 1.6%.
And John, what's happening at Realty Income stock?
While investors have been able to rely on Realty Income's growing monthly dividend for 30 years, share price is not following that same trajectory, at least not right now. Now, there's a good reason for that. Rising interest rates and signals from the Federal Reserve that rates will remain higher for longer have taken the shine off real estate investment trusts. And why? Well, real estate investment trusts add to their portfolio, but this means having to borrow money, and higher costs are putting pressure on REITs and their profits. This has led to a broad-based sell-off recently with REITs. The Charles Schwab US REIT ETF is the largest REIT ETF, and its shares are down 10% over the last month alone and 12% over the last 3 months. Now, O stock, or Realty Income stock, is currently down 12% over the last month and around 20% year to date and slightly more than 14% year over year. Certainly not the most compelling numbers. But again, this has more to do with rising interest rates and investor sentiment than anything going on at Realty Income. The outlook actually looks much better, with Wall Street analysts providing a 12-month share price target of $68 to $74.
John, thank you so much for your analysis. Just to recap, when it comes to reliable, growing dividends, it's tough to beat Realty Income Corporation. Calling itself the monthly dividend company, Realty Income is member of S&P 500 Dividend Aristocrats Index, which means it raises dividend for at least the past 25 years, which it has. To date, Realty Income has declared 639 consecutive monthly dividends and increased the dividends 102nd times since going public in 1994. Since 1994, its dividend has expanded at a compounded annual growth rate of 4.4%. There is more to Realty Income, though, than its dividend. More broadly, it has proven track record of returns, including 14.2% compounded annual return since 1994 New York Stock Exchange listing. It has a strong track record of stability and growth earnings, 26 of 27 years of positive earnings per share growth and 5% median adjusted fund from operation per share growth since 1996. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.